All right, hello everyone. Hope you all had a nice Christmas or Hanukkah or whatever holiday it is that you celebrate. It's a pretty nice long weekend, and we got another one coming up on this week because next Monday is a holiday. The market is closed. But anyway, as we go into the last week here of the year, sometimes there's some can be some kind of erratic or kind of strange action as people balance their portfolios, so forth and so on when we go into the end of the year. But we really can't get away from what it is that we do. And that's we pay attention to the levels, the trends. We let the market talk to us. You're going to hear a lot of confusing stuff, probably if you watch the media over the next week or so. But you probably shouldn't watch the media so you don't get confused. You know what's never wrong is the market. So let's see what the market is telling us. Now, I did not look at the market today, and it's now about 8 o'clock at night. So let's see. At last we looked, okay, we had really positive sentiment to the point where it's an extreme. And if too many, or if the vast majority of investors are bullish, what do? They spend their money, and then the market eventually runs out of buyers and it can only go down. But let's take a look. Okay, so here's today. Now, notice how we're getting close to the all time high. There's a good chance there's a pretty meaningful amount of resistance around 480, 481. There tends to be resistance at former peaks. Like as you can see here, when we rallied back in the end of July and early August, we ran into resistance here. It was a level that had been a peak before. So it's not a coincidence that that's where we ran into resistance. You tend to run into resistance or into resistance at levels that have been peaks because you got people that bought back here that are upset that they bought once the price falls out of bed, like basically the day or two after they buy, and they tell themselves, I made a mistake. If this ever gets back to my price, I'm going to get out at break even if I can. So you have remorseful buyers from back here placing sell orders over here. So we tend to see resistance at former peaks. It's not an uncommon thing. As a matter of fact, it's a very common thing. So anyway, we are within about 4 or 5 points of it going into the end of the year. It's kind of weird. It's like we're in this like race, right? It's like got 3 more days of trading. We're only 4 points away from an all-time high. Will we get there? Will we not? I don't think we will, but I've been wrong before, so we'll see. All right, so we got to watch this. Here's the S&P, kind of slowly trending higher, spinning distance to that all-time high. I mean, it's not a big move, but that's pretty relatively good action. We really want to keep an eye on the financials still. I think that the financials are really in the driver's seat now. Different sectors are in the driver's seat at different times. There's 11 sectors, right? Sometimes healthcare is in charge, sometimes it's tech, sometimes it's financials, sometimes it's a couple. We don't really know. I think now we got to watch the financials here. If we start to reverse and we get back below this important 337 level, see, there tends to be supported levels that have been resistance. You can see that down here. See resistance here, became support here. Okay, so this is another common thing. This is our seller's remorse. People sell, and when the price goes higher, a lot of the people who sold regret their decision to do so. And they say, if the price ever gets back to my sell price, I'm going to buy my shares back. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it can turn resistance into support. As you can see, that's what's happened now. Okay, this setting the stage for another move higher, or will this support give out and we could see a pretty decent move lower? My suspicion is as we go into January, we're going to see a move lower. And mainly the reason why I'm saying that is because of our sentiment readings have been so amazingly bullish that it's at an extreme. Like, check this out, right? This is the inflows into the SPY. And we just had the biggest ever, and not even just the biggest ever, but the biggest ever by a lot. It's almost double what the previous high was back in late 19, which is right before the market went into a big sell off. So this just shows people are excessively bullish, and if people are excessively bullish, what do? They invest their funds, and what happens when they're done investing their funds? They don't buy anymore. And guess what happens when there's no more buyers? Well, the market can only go down. So if we get some kind of a catalyst here, big move lower in the bond market or something in the Middle East, and sellers come into the market, I think they're going to have a hard time finding buyers. Speaking of bonds, let's go take a look at that. So we're just going to look at the TLT, which is the the 20-year plus bond ETF. And as we could see here, right, support became resistance. This is our buyer's remorse. People bought here and price goes lower and they're like, I wish I didn't buy. If it gets back to my price, I'm out. So you get remorseful buyers placing sell orders at the level that had been support. If there's enough, it converts it into resistance, and that's what happened here. Now, a lot of times when we get to resistance levels, the sellers, resistance is a large group of sellers, some of these sellers start to get anxious and worry that some other seller is going to undercut them. The buyers are going to go to whoever's willing to sell at the lowest price. So what happens is they start undercutting each other. You get this like snowball effect. So we tend to sell off of resistance. And if that happens, that's going to push interest rates higher, and that could be a catalyst to the correction that I'm anticipating. We can see here, right? We get up to resistance. Some of the sellers start to get worried. They're going to miss out, so they undercut each other. Snowball effect. Snowball effect. Snowball effect. You can see snowball effect. Snowball. And we rally off of support because it's the opposite. There are buyers who notice the price isn't going any lower, and they start to cut ahead of each other because the seller is going to go to whoever's willing to pay the highest price. So you get this snowball effect of buyers outbidding each other. 95% of the market's moves are psychological. They're not because of what they're saying on CNBC or Fox Business News or Bloomberg or whichever fake news fake news institution you want to look at. And I'm not saying they were fake on purpose. I just think that the people you're watching are journalists. They're not really market people, so they don't really get how it works. Anyway, we get it here. So check me out on Benzinga Trading School or over here on my YouTube page. All right, so I think that's the most important stuff to watch. We'll just do a real quick look here through tech, slowly trending higher. Healthcare. Oh, actually, you know what? I know where there's some trading ideas here. Here's healthcare. Energy sector. Check out this move in oil. Looks like oil is finally breaking out above this important 74 level. And again, here's what I just talked about, right? Levels that were resistance can turn into support because of seller's remorse. Levels that were support can turn into resistance because of buyer's remorse. Now, it looks like we broke out above the resistance. What is a break at? Well, it means the price is above the resistance. It's not just symbolic, everybody. It shows us that the sellers who recreated the resistance are out of the way. Maybe they cancel their orders. Maybe they finish their orders. Regardless, if the price is moving higher, those sellers aren't there anymore. And whenever you take a lot of supply out of a market, regardless of whatever the market is, regardless of the market, which market it is, the demand, meaning the buyers, are forced to pay higher prices to get their orders complete. So it looks to me like oil can get up to around the 79, 78.5 level pretty easily. I don't see anything in here that looks like it's going to be meaningful resistance. And of course, if you're not an oil trader but you want to profit, we can look at XLE, which is the energy sector ETF, which basically tracks oil. I mean, it has natural gas, other things as well, but for all intents and purposes, it tracks oil. So that could be a place. You could look at some of the stocks within the energy sector. ExxonMobil, for example. Good chance that this follows. I mean, you can see the charts are pretty similar because basically these guys own a lot of oil. And if the price of oil goes up, their company becomes more valuable, the stock becomes more valuable, investors buy it, and it goes up. All right, everybody, thank you so much, and I will see you tomorrow. Have a good night.